You are listening to ChartingWealth.com for Tuesday, the 26th of April, 2016. We always start with IYY, which is a total market index fund, an exchange-traded fund that tracks the whole market. We had a down day as the week began. The total market was down 0.41% on Monday. Derivative oscillator still in the positive, in the green, but losing energy. And we have the MACD getting very close to the signal line as it did back around the 12th. It didn't stop then. It shot up on the 12th. 3 additional big open box green candles up, although we now are seeing signs of a further weakening. We shall see. It hasn't, it's not over till the fat lady sings, and the fat lady does not sing until the MACD crosses over the signal line. At the same time, if we see the green turn to red on the derivative oscillator, it also tells us a lot. Of course, the 2-day trend line was broken back on the 2-day candle on the 22nd of April. That was on Friday. This first candle that's being drawn this week, it's only the first day of the 2-day candle on Monday. So we shall see what we shall see as the market continues to develop. But down 0.41% for the day, the total market was. Now we're going to go and look at the intraday chart. On the 4-hour chart, what do we see? Big down movement in the morning, pushing through the 2-day trend line, confirming that push through, and then further down movement in the afternoon. Again, the derivative oscillator heating up, and the MACD and the signal line continuing to diverge. So confirmed down movement on the 4-hour chart since the morning of the 22nd, and that movement continues down throughout the course of the day on Monday. So we have down movement on the short chart on IYY, and we don't yet have a confirmation on the big chart. Could pop up again tomorrow, so we don't yet have that crossover. Now let's look and see how similar the S&P 500 is. Looks very close to the same as the total market. Remember, SPY is an exchange-traded fund that represents the entire S&P 500. Those are the 500 big companies, lots of volume in the market. Has not yet crossed over on our big chart, on our 2-day chart. Still in the green on the derivative oscillator. Getting closer, though, on the MACD as it did back on the 12th. We saw very similar to what we're seeing now. We saw the derivative oscillator lose even more energy. Things got really close on the MACD and the signal line, but that didn't happen and then popped up for 6 additional days. So we'll continue to watch. The 2-day trend line has been violated. If we take a look at our 4-hour chart, what do we see? A lot of down movement, a little bit different than we saw with the IYY, the total market. A lot of down movement in the morning and then some up movement in the afternoon. Crossover going down, confirmed on the morning of the 22nd of April. The S&P 500 was down 0.17%. Again, the total market down 0.21%. Going to range back out to our 2-day chart. Going to go to the Qs now. The Qs is QQQ. What is that? That's the NASDAQ 100, the technology stocks. Look at what happened throughout the course of the day. Big down movement. A lot of movement down on the 2-day candle that ended on the 22nd. Actually started on the 22nd. And we see the chart move down again throughout the course of Monday. That candle is not over yet, but we went ahead and drew our 2-day trend line going down. We had a crossover. Sometimes folks say, when do you draw a new trend line and in which direction? Well, you draw it in the direction of the rotation, whether it's a rotation up in the MACD or down. The MACD crossed the red signal line going down, which means, of course, a down move. The Qs was down 0.01% for the day. Not a great deal of down movement, but enough to be able to push over the MACD through the signal line, plus a big red derivative oscillator down move. So again, those kinds of things are extremely important to see. Now let's look at the 4-hour chart on the Qs, and you see lots of down movement on Friday, both in the morning and then followed by movement down in the afternoon, down movement in the morning on Monday, and a little bit of up movement in the afternoon. We're below the 2-day trend line. The rotation over on the Qs happened back on the 19th. Now, those of you who are new to understanding how to read these charts and react to them, this movement that started back on the 19th in the morning with a rotation over going down on the short chart, we've not yet been given an ability to jump into that move. The big chart just paralleled that movement that happened back then. We weren't sure that was going to happen. We don't know until we have a crossover going down on our big chart. Once that occurs, we're going to wait for the short chart, that is the 4-hour chart, to rotate back over going up, and then to move back over going down. That's the point that we look to get in. Follow us every day. You'll see this play its way out as we continue to watch the markets go back and forth. So stay with us. We'll show you what we're talking about. That's the reason I tell everyone, please watch us every day. Listen to us every day. Pay attention. We'll tell you what to look for, and when we start seeing things happen, where positions are tradable or investable. And what we mean by that is, of course, anybody listening, if you don't already have your virtual trading account, we're not a stock calling service. We're not telling you what to go do with money, real money. We're telling you what to do with virtual money so you can practice. Once you get good enough and understand what it is we're talking about, can see these trades and investments developing, and have made multiple successful practice trades, then it's up to you to decide what you want to do with your own knowledge. I like everybody who trades to have their own quirky ways of doing things. There's a million ways to make money in the market, a million ways for you to do what's comfortable for you based upon what you're interested in, what your likes, dislikes, skills are, areas of comfort and discomfort. So again, make your own way. Listen to us. Start learning how to do all this. Practice. And then once you get good, you can make up your own mind. This is where we ended the day on Monday as we go into Tuesday the 26th on the Qs and the other 3 indexes. Now lastly, we're going to range back out to our 2-day chart. We're going to take a look at gold, which was up 0.30% for the day. We have a confirmed down move in gold. Gold has been in a confirmed down move, although it's really been slipping sideways since about, the 24th of March. But gold has moved up a little bit, but not enough ever to push itself back over on the 2-day chart. It's in a confirmed down move since roughly the 15th of March and has continued to meander, is the best I could say with gold. So confirmed down move on the MACD and the derivative oscillator. If we look at the 4-hour chart, what do we see going on? Confirmed down move on gold once it crossed over. That was in the morning of the 22nd, Friday. A lot of down move in the morning on Friday, then in the afternoon, and then it sort of slipped sideways, still below the 2-day trend line. So if someone asks, where is gold headed? Well, according to what we see in the charts, down. Although I don't put a lot of reliance because of the sideways slippage in gold on a firm down move. If one just looks at the chart, you can just see gold sort of sliding sideways. Not any real strong down moves, even though it's been in a down move on our big chart. That's one of the problems that we have. One of the few problems we have with the MACD, the moving average convergence divergence indicator, is it's not good for a sideways slipping market. But when a market's surging back and forth, the MACD is wonderful when we see crossovers in a market that's really moving up. But again, confirmed down move on both the short and the long chart. That is where we ended the day on Monday as we go into Tuesday, the 26th of April. Thank you so much for being with us. If you're not already following us on Facebook, Twitter, Instagram, YouTube, follow us on any or all of those. Big thing you need to do is to go to chartingwealth.com, sign up for our newsletter. You'll get the video every day that we produce, plus our weekly review and forecast. We also provide all of those to you at our YouTube channel and, of course, on iTunes, where you can subscribe to our Charting Wealth podcast, plus a second podcast that we started putting out in the last few weeks. It is a video podcast of our weekly review and forecast, so you can find 2 different Charting Wealth podcasts. Would you go to our main one, which is the daily podcast? Subscribe to that if you would like. Whatever you do, please stop for just a couple moments if you appreciate the free service that we provide, and give us a 5-star rating and say something nice about us. That is so helpful and kind. A little bit of reciprocity would be most appreciated. Thank you again. Hope everything goes great for you this week from chartingwealth.com.